Hello, Greg.
Hey, Mike. How are you?
Oh, what's going on? Where's my volume? Uh, shit. Hello?
Can you hear me?
I can hear you. My settings got backwards on me there. How's it going?
Can you hear me, Mike? Hang on 1 second. Let me make sure
Yes.
I'm.
I can hear you. Can you not hear me?
Yeah, you're not. Let me. What's
I
going
should
on
be.
here?
Uh, it looks like I'm coming through.
Can you hear
Hello.
me?
I can hear you. Can you hear me?
Yeah, for whatever reason, you cut out. You're really faint, and it sounds like you're like in a closet type thing. I'm trying to figure out.
Well, that's no good. Let me try something different here.
Mike, let me log out and log back in and see if that does anything.
Okay. Does that make a difference for you?
Yeah, I can hear you. You can hear me. I can hear you. I think we're good.
All right, perfect. And I can get rid of this. Um, just another day in Lumberland, right?
Yeah, another day, another limit move. It's certainly getting repetitive. I think this is 23 out of 25 now. I'll be perfectly honest. I've stopped even counting.
It's easy,
It's easier to count the days you don't have limit moves.
right? All right, let's get rid of that. Set this up here. Um, all right. Yeah, we are live and ready to go. It is the 15th of February. On the back half of February already. Can you believe that?
Yeah, time flies when you're having fun, right?
We certainly is. And aren't we having fun? Um, today's show will be a little smoother. I'm back in my office. Had a great time at the International Builder Show. Um, there's a lot of concern amongst the builders about lumber prices. That is for sure. And the thing I find most interesting it's not the overall level, but it is the volatility. So I think that's one of the things that I'd like to kind of talk about today is plan your trade, trade your plan, and don't let the volatility get you running around because you'll lose your mind and and
Yeah,
potentially
I
lose
know.
more
I
money.
as much as I want to say the volatility is going to be reined in, I don't see it. Unfortunately, anytime soon. I think this is all a function of more timing than price. And so long as we have this ongoing transportation, truck, rail type issues, it just fuels the volatility. I mean, you've got the largest sawmill in North America that can't sell cars at 2x4 today on rail. They have limited trucking to Canada. So as much as we want to pull coals in the futures and say how illiquid they are, cash is just as illiquid right now.
There's something else. There's an underlying reason for this that people may not realize, and that's the amount of contract business that's in there.
Sure.
So, for a smooth, well functioning market, you should let the supply. I mean, a smooth market is one where the forces of supply and demand can find equilibrium at whatever point that is. But when the supply is constrained and constraint by meaning that it's not open market. It's a small amount of the wood that gets to decide where the real price is.
Yeah, I think you're spot on, Mike, and that's unfortunately, when it comes to our pricing guideline, random lengths. I mean, they're forced to look at a very small percent of actual wood that actually trades in that open market to dictate pricing. They just have to go off of, well, this is what the mills told us versus what's actually trading. And here we are, where again, I don't think you could buy, unless you're on a contract with one of the large sawmills. I don't think you could find the volume. I'm not sure what the platform's showing you today, but I don't think if you wanted to go buy 20 cars of Western SPF 2x4s, an 8 to 16 tally, if you didn't do it in futures, you're certainly not going to do it in cash today unless you have that contractual obligation.
For sure. And so how does the market really find itself if it's not allowed to? But anyway, that we can go down that rabbit hole for hours. Let's do what we do every week here. Let's take a look at the facts and the statistics and see what there is to see.
So again, we'll jump into how lumber compares to the other markets here. Equities are kind of in consolidation mode. We obviously have a big rally today with the news that Russia has kind of pulled back some of its forces from the Ukrainian front lines, saying that this was just a military exercise. So as a result, today, you've got extreme volatility in that the Dow was up over 400 points at one point. Crude oil was down near $5 after being up over $95 yesterday. Front month crude dropped just above $90. So volatility seems to be the theme all around. The one thing I'll point out on this chart that jumps out at me is that purple line at the bottom. Your 10-year notes continue to make new highs. You got to go back to 2018, 2019 now. We're up over 2%. So the markets are starting to build in not only kind of when, but how much as far as you're going to see from the Fed. And I think, Goldman updated from 5 rate hikes this year to 7. And I think there's an extreme possibility now, not only do you get a rate hike, which is almost a foregone conclusion in the month of March, but the actuality of seeing them kind of front load what they do, where you could get a half a basis point. I think it's probably going to be greater than 0.25. It's going to be at least a half a point, and they're going to get aggressive on these initial first rate hikes to see how the market reacts to it. And the market is having to absorb this volatility all over the place. Lumber just isn't the only market with the volatility right now.
Oh yeah, look, there's volatility everywhere, and what we've seen is that the buyers and sellers have gotten into synchronicity. Then everybody's doing everything at the same time, and when that happens, it creates. Going back to what I first started talking about, you don't have supply and demand able to find equilibrium, because supply comes in, demand goes away. Demand comes in, supply goes away. It's just not a smooth functioning market in lumber or in some of these other.
And I always equate the volatility equilibrium in lumber as this. Think of a pendulum that swings back and forth, and instead of this smooth, kind of obvious pattern, lumber likes to gyrate violently back and forth, where you're at that equilibrium for a fleeting moment before you swing hard in the other direction.
Absolutely.
We'll jump forward here. Weekly continuation chart, and obviously the sell-off we had was an anomaly. The magic of illiquidity. We're back up. We're within striking distance now. We could finally, with the limit up close today, you're officially within striking distance of testing the recent highs here, this 1338.20 area. And the path of least resistance certainly feels like it's to the upside now versus the downside that 2 weeks ago. Cash is very difficult to find, and the futures has reacted violently back to the upside, where whatever discounts were in futures here. Here's the March contract. Again, you've traded back up into the Bollinger Band high. You're within striking distance of the highs now. And then from a basis standpoint, a week ago, we were at a $50 discount in March versus physical cash. Now you're basically even money with Fraser on this morning at 1290, futures lock limit at 1291. And again, cash is probably somewhere in that 1300, 1330 area, but you've narrowed this massive gap that existed 2.5 weeks ago. You're almost back to even money now between cash and futures.
Yep. And look, you can get out of a March contract today if you want. The July contract and the May contract are not lock limit. So currently the best offer in May is $1,220. The best offer in the March-May spread is 99.6. So we'll just call that 100. So you could buy a March right now at $1,320.
Right. And, I would think that the pool today, so just to kind of recap, on Friday, we were obviously lock limit up. We came off, and a lot of it probably had to do with the threat of, there's going to be this imminent invasion of the Ukraine. All markets kind of freaked out. Crude oil spiked higher, equity spiked lower. Lumber ultimately did trade off its limit on Friday. You went from a limit up move to a limit down move, so you had the full $90 range. And so anybody that was short this market was given the out on Friday. So my guess is when you look at the pool today in March and or May, that these are people that truly want to get long, because this is more liquid than physical cash right now. I would be surprised, if these are shorts at this point. I think most of those shorts that wanted out are gone. This is new longs looking to come in here.
Yep, I agree. Say that the spread markets are showing the strength of March. People want the deer, the near and dear, and the sellers are willing to sell out at a discount.
Yeah, and I think when we'll go through it when we see open interest, but you'll see we're gradually building open interest here, which is a good thing. But you're getting that build in May through Sep through Nov. So the forward buying, mill hedging is coming into the back months here more so than March. March continues to be this liquidating contract. Here's May. Here's May. A week ago we were 109. May under physical cash. Today, again, you're somewhere around 70. So you've had a bigger narrowing between March and cash versus May and cash. And you'll see this in July as well. A week ago, we were 142. Today, we're 152. So these back months are struggling. When we have these limit moves, I know July's up 41.80 today. Sep just traded up 44.90. But you're struggling to push these back months up relative to March. The real bids are coming into that March contract, because as you grind through this month, you're getting closer and closer to physical cash. So there's definitely interest to own the liquidity. I say liquidity. That's a oxymoron in lumber, right? But to own March, own May, I think there's more comfort. If you can't buy cash, you're buying March right now, and then you've got the forward guys along the back end of the curve. Here's March, right, May.
Something we heard down at the builders show. It's not just that's constraint. There's many building materials that are slowing things down. So there isn't a great incentive to push ahead with signing contracts and doing business for September, call it Q3, Q4 the builder, because they don't know the rest of the products anyway. I think until there's clarity on products, you're not going to see any sort of premium in the back months.
Yeah, no, I agree. And that's kind of in a lot of calls with private equity, multifamily developers. We do a lot of calls now with their general contractors, and yeah, we can get the framing lumber. No idea if we can get the OSB, or we have to piecemeal this together. and then, okay, we can get this to the site, but we're not sure on getting all these other pieces parts. And it's just amazing how disruptive this is, not just for lumber, not just for panels, not just for OSB, but for all parts of building materials. That there's no continuity, or it seems very limited, to say the least. Here's March, May. We bounced hard. Obviously, last week we went back up to this 120 area. The thing that I find interesting with the market coming off limit on Friday, and then kind of we did trade off a little bit yesterday before we went limit up. We have limit up today, but this March May spread is in the 95.70 to 99.60 area. So it's had a very difficult time. Even though March has kind of surged back up and is within striking distance of its highs, you're not necessarily seeing the spread structure, at least in March, May, reflect new highs right now, where you're getting just as much interest to buy May as March. So if this is truly going to be this parabolic bull market, then this March, May spread, and again, this is all in the eye of the beholder. You either think that this is going to be like the last 3 expirations where the spread collapses in on itself, or this kind of mimics what we did a year ago, where if this is truly a parabolic market and guys can't find the wood, then March, May could conceivably go to a much more substantial premium. It's going to be interesting to watch this. And again, when you look at the stochastics, you look at RSI, you're more oversold than overbought. So you're bumping up against the Bollinger Band high here. So it's going to be interesting to see if this market can break out above this 120 area and go out to 130 to 150, or does it kind of stall out and begin to fall apart again?
Hey, Greg.
I'm on the fence on this one. Yep.
Greg, we're having some connectivity issues with LinkedIn right now.
Okay.
I'll tell you what I'm going to do. I'm just going to end the stream and then restart it.
Okay.
So let's just hang out for just, you'll get booted out, but then we'll come right back. Okay.
Yep.
All right. Sounds good.